Hello traders, and welcome to the second video within the full section of the IPDAtrader's private mentorship course. And in this video, guys, we're going to be further discussing confirmations, right? So far, about confirmations, you should understand why they happen, where we look at them for, right? What time frames you should be using in regards to your confirmation. And as a refresher, you should understand that if you're watching a 30-minute time frame, just like in this case, your confirmation should probably occur within the 1 minute time frame, right? Most probably and most likely. However, if you're free to really flick through time frames, right, you can potentially use a 2 minute if you like. Whatever the 2 minute is presenting you in relation to the 1 minute, you can use a 30-second, a 3 minute. It's just a rule of thumb, right? You don't need to follow that to the T. It's just a guidance for you to understand how much of a lower time frame you will need to watch depending on the time frame your POI has been selected, right? So we actually spoke in detail about external and internal structure shift and how that is a confirmation that we want to use, right? However, before we actually continue, we're going to be refreshing that stuff because I know that one example may not be enough. And what we're actually going to be doing now is taking a look at different examples for potentially a bearish example of an internal and external shift. But really, the only way you're going to get sort of good at this stuff and understanding and tracking order flow while it's developing in your point of interest is by actually watching the charts, guys. Nobody can take the chart time away from you. No mentorship, no video, no course. At the end of the day, you need to be willing to put all this effort and all this time. And that is explained within the section 0, where we talk about the sort of how your mindset should be as you go through the videos and really start to understand the concepts, right? So let's actually continue, and we're going to be taking a look at different examples of external and internal shifts. I've actually this time prepared some examples. Let's go to the 30-minute time frame and let's start with the bearish example, okay? So what do we see over here, right? If you saw if you went through the section of point of interest, you understand that this is a POI because this is a breaker, right? It has the imbalance characteristic, which makes them higher probability, and this could be a POI you could be watching for, right? And potential mitigations. At the same time, guys, do not forget about the fractional nature of the market. You could have been watching this POI as well, right? And there's nothing wrong with that. But if we apply POI rules, you should now understand that, hey, this is actually a POI well above the 50% over here. So this is a POI I want to watch. Great. What do we see? And this is important. This is where you start to put the pieces together, right? You can see, and I've actually labeled it, that we had some sort of channel over here occurring, right? Right below our point of interest. And this is important because you want to see how price is behaving right before your point of interest. That's going to give you clues, right? We can see over here that we had trend line liquidity on the top and trend line liquidity on the bottom. What do? With this wick, we grab it, right? We trigger people that want to buy above the trend line, whatever, or sell below the trend line and sell at the trend line, sorry. And as you can see, we grab it all up, move down. The people that sold the trend line are now in profits and making money. And people that want to buy the trend line here are also in positions, right? So what do? We actually move higher into our point of interest. This is a great situation to be in. When you see this sort of manipulation occurring right in this case below your point of interest, this is going to be great as you trade into your point of interest. This is going to grant you sort of a more confidence in looking at your point of interest because you understand that people have been manipulated right before that and people have been taken out, right? So this is a pretty good spot to start watching your point of interest and following the rules. You want to sort of be watching a 1 minute, 2 minute, 30 seconds, right? Whatever you see and deem as better in this case. So I'm actually going to zoom into the 1 minute and we're going to be following price as we hit our point of interest, right? Hopefully I can go that far back. I'm guessing probably yes. So let's actually see. Yes, we can. Let's get rid of some of the drawings. Again, we cannot see the manipulation play because that data is not available, but we're going to be focusing on the mitigation play, right? And this is where you start watching your mitigation. So first rule over here, right? Where does this high come from? The origin of this high actually started over here. So you want to draw a line, whoops, a potential arrow like this, and you can say the moment we trade below the low, we have an external shift. And that's it, right? Again, you could potentially use this one over here, right? This is also some sort of valid start of a move up that made the high. But I would highly suggest you really be to really be patient and wait for the actual point, which in this case is clearly over here, right? Because if you're watching this sort of structural play, you can see that this move over here actually started this high over here, right? So you want to wait for that to break. So we follow price. We can see we're sort of manipulating, consolidating, right? We can see over here that we created relative equal highs. Just over here, we grabbed that out with this wick pretty aggressively, right? People wanting to sell very early are now stopped out with this wick over here. So we follow price and we see displacement, guys. This is actually also an important part of watching your point of interest. You want to see how direction is shifting and how we're starting to sell the market, right? You don't want to see sort of down moves pretty slow, pretty low volume, then retracing hard but then slowly continuing down. No, you want to have volume and candles in your direction, right? That's going to play in your favor. So we follow price at this point. There's not much to do because we're still above the external shift point. So we wait. Let's see. Okay, at this point, we break the external shift, right? We do that and we label it. We say to ourselves, this is our external shift. Let's continue. What do we have next, right? So we follow price. We see over here that we're sort of kind of consolidating, moving slowly down, but then continuing higher. So this means that price is taking its time to close their positions that they have to close within this area, right? That's why you don't want to rush. I would actually go ahead and do something like this where I would say to myself, hey, we've got, and again, this is pretty messy price action because it's Bitcoin, but the principle applies, right? I would say to myself, hey, we have this low over here that is going to be responsible for our internal shift. And again, if you don't know what we're discussing here, you should go back to the previous confirmation video, right? So this would now be our internal shift and you're waiting for that. You're not executing just yet, right? And I would actually go ahead into a 3-minute time frame because that mitigation play took longer and you want to be adapting, right? So what do we see next? We see sort of still an uptrend occurring, right? We have a low, potential higher high, higher low, higher high, higher low, but then we fail to make a higher high, right? So we are still watching at this point. We're not executing. And what you really want to do is sort of drag this arrow across and you want to wait for that to break. Once you get that break in, you can safely say that your external structure has shifted. That happened right over here. And referring to the structure video, you want to assess in the way we break the structure, right? If we break with a tiny wick or if we break impulsively below, right? If price would have continued strongly below, that would then tell you that a retracement higher is not so probable. Matter of fact, we're probably not going to retest sort of deeper retracement levels, right? So in this case, we see that we just really trade below it for a second and move back up. So that tells you that a bigger retracement into higher discount pricing is probably going to occur, which is exactly what we get, right? So now, what do we do in this case? Well, we see that price took its time and essentially at this point we traded below this low, which makes it a valid external and internal shift, and now you're valid to look for sales, right? The moment we trade below over here, you're now valid to take sales. So what do you want to do next? Well, you want to look for POIs that have been left behind without mitigation, most probably, to execute your positions, right? So I would actually denote a couple of those, right? I would see one here. This is an FU candle that's explained within my point of interest section, right? I would actually use something like this, and I would say this is a POI that price may want to hit, before we continue lower, right? As long as we don't break above this high, we're still within our shift and we're still valid for sales. So we denote that. We leave that POI over there. What else do we see? We see a POI over here, right? At this high. So you could potentially use this entire region from the week's low, this right here. Really, the refinement is really up to you. I would actually go ahead and include this wick because we did have some gaps up. Again, this will probably not happen in forex, but this is BTC, so we need to adapt. And what do? We drag her across. And we can see, right, we trade below the internal shift and now we're valid. We can see consolidation, which is liquidity being engineered. And what do, guys? Following the principle. We have liquidity on top over here. We have liquidity below. What do? We grab the liquidity into our point of interest and we aggressively start trading lower. This is where you should have taken your execution, right? You could have potentially split your risk. Say to yourself, I want to risk 0.5. something like this, right? And putting my stop loss above the POI, knowing that price can potentially come lower and this is higher, sorry, and this is where I want to take the rest of my 0.5% risk, right? Right above the high or above the POI. That's really up to you and sort of a preference idea. So this is really telling you that there is no right or wrong way, right? As long as you follow the protocol, you are going to be fine. You need to wait for those externals and internal shifts, and you need to look out for the POIs that were left behind without mitigation, with potential imbalances over here, and those are your POIs where you are going to be trying to execute on, okay? And then you would take the trade lower. You could target, once again, liquidity lows over here, right? Liquidity low. You should now assume that we're clearing liquidity to the downside and that liquidity to the upside is being held for now, right? So you can sort of see that. You can potentially target over here, or you could have targeted this FU candle demand zone, whatever you want to call it, over here, and that could have been your trade, right? And that's it. And as you can see, we actually move even lower, and that's fine, right? You should always try to spot a target for yourself, but that's going to be deeply discussed within the section number 5, where we talk about risk management and trading plan. But for now, I want you to focus on the technical aspects of the trading that we do in this group, so that you can then safely build your trading plan, right? If you don't have the knowledge, if you don't have the ideas, what are you really going to write in your trading plan, right? It doesn't make much sense. So let's actually continue and look for one more example, which I've actually prepared over here. What do we see here, guys? Once again, we're not assessing structural liquidity. We're focusing on confirmation, because you really need to get this part of the this sort of piece to the puzzle right if you want to make your trading work, right? So let's see what we have over here. Let's actually zoom in. Once again, you should understand that this is a point of interest. If you can avoid pretty really reliable points of interest, right? If I'm being honest, those are the best, the better points of interest in my opinion, but that's just from personal experience. So what do we see in this case? And let me actually draw this correctly, right? You could potentially use the 50% as I really tell you within the point of interest section, right? So you could use this 50%. And as you can see, it has great reactions over here, right? So we zoom into the lower time frame. And let's try to find our protocol, right? It's not always that you're going to have the perfect entry protocol, and that's why you're sometimes going to need to stay away from trades, and that's fine, because this is giving you a system to execute trades. So you don't have to, so you no longer have to really try and sort of deduct for yourself when you're buying and when you're selling. You can just be following the system. So let's see what we have over here. You could potentially jump into the 1 minute, and I would say, okay, we have a 1 minute IFC over here. I may want to be refining. Good. Next thing we can see, right? We create a low right above our point of interest in this case, right? And if you follow the liquidity video, you understand that this is a swing point liquidity. So your liquidity rule is sort of being fulfilled over here just with this particular scenario. But once again, you should assess higher time frames for more liquidity pools in your favor, right? So we see over here that we take that swing point liquidity into a point of interest. Now, this is sort of where we can see that we shift externally, right? At the time, if you were watching this, this is your low. Where did that low come from? Well, we could argue that over here, or over here, right? This is sort of where the subjectivity aspect kicks in, right? But I would have really thought about this one over here, right? Or the wick to the right, right? It's pretty much the same thing. So we wait for that. We get our external shift. This is a valid external shift over here, and now we're waiting for our internal shift. However, that never happens, right? And as you can see, price makes that new high but fails to make a higher low, right? It tries to mitigate some positions over here and move higher, but it fails. So the moment we make a new low, you need to reset the protocol, right? This is no longer valid, and you need to be assessing what you have in this case now, right? So understand that, please. If the entry protocol fails while it's developing, you need to reassess. Point blank period. That's something you want to keep in mind. If the entry protocol fails while it's developing, you want to reassess, right? And this fails the moment we trade below the low, because we're no longer holding external shifts. We are actually making a new low. So whatever happened over here, it's not really of importance at this point. So we reset and we try again. Same question. Where did this low come from? Well, it's pretty obvious. We have some sort of order blocks over here and some sort of up move before down move. So this could very well be considered your external shift in the 1 minute. If you look at a 2 minute or a 3 minute, they will tell you different things, right? That's why you want to sort of do it for yourself. And actually, if we look at a 3 minute, this actually shows us that this external shift is actually pretty valid, right? We see that up move before a down move, that makes new lows. So we go back to the 1 minute in this case. We can now see the following. Let's actually zoom in over here. So let me get rid of the drawing over here because you understand that now, and let's actually sort of draw the arrow to guide our eyes within the protocol, right? So we see over here that we trade above that, which is our external shift over here, and now we're following price, right? You can see that we shift externally and we never get that 50% or more retracement, and that's fine. So now you understand that this is your high over here and this is a leg up because we never got that 50% retracement, right? So we continue following price. We actually shift externally, continue way higher, and then we drop back down lower. Now we've retraced more than 50%, right? If we look over here, we can clearly see we are below the 50%. Matter of fact, we're in heavy discount prices, right? So we follow price over here. What do we see, guys? Let's actually take a look. Now you're waiting for some high block up here to break, right? Whether you use this IFC structure, whether you use the high itself, it's going to be always the safest, but that's going to mean that sometimes price will break internal flow over here, right, without breaking the high, and is going to shift and continue up, and you're going to be left out with an entry, right? So keep that in mind. The high is the safest, so I would actually wait for that, and I know that once we break that, we have shifted internally as well, and now we have an external and internal shift, and now we are valid for buys. So what do? I look for POIs where I want to take my entry, and I would clearly see that, hey, this is an awesome POI over here, right? We have a gap over here, which shows us inefficiency in price, right? You could include this, you could include this, you could include this. This is subjective, but I would sort of include the gap right here, and I would say to myself, this is a POI where I want to potentially place a buy limit. At the same time, guys, if you see that price is over here and you're not expecting a super deeper retracement, you can use this one over here, right? And as you can see, this holds for a second, but then trades lower. And that's why we said we need to keep our stop loss below the low that actually initiated the shift, okay? Which in this case will be this one. So we follow price. I would actually leave that POI over here, right? You potentially take an entry over here, then goes up in profit, depending on how you manage, can come back into drawdown. But as long as we don't break the origin low, we're good. So we continue, we drag that across. We have another POI over here, right? This sort of FU candle with the gap. You could include some of the gap. And now you know where price actually hit and moved higher, right? You could have very well waited for that POI over there. You put your stop loss below the low, always below the low, and you take this higher because you understand that our protocol is fulfilled, right? We have shifted externally and internally, and the probability tells us that we're now going to be moving higher. So a couple things to keep in mind, guys, and this is pretty important, is that every time you're trying to follow the protocol, and in this case, right, since this is a bullish mitigation, every time a new low is made, you have to start your protocol from scratch. You cannot say to yourself that, hey, this is still that valid external shift over here, right? No, you have to start from scratch. If the protocol fails, it never confirms itself, and we actually make a new low, just like it happens in this case over here, right? You want to keep that in mind. Every time your protocol fails, you have to start it from scratch, just like we did over here. Another thing that is important is that you really want to be patient with your mitigation play that you're happening, right? Remember that there is not going to be two exact same equal mitigation plays, and hence you need to be very careful and patient with it, right? The bigger the time frame that you're using, right, for your point of interest, just like in this case over here, let's actually try to find something. So this is absolutely okay. No, this actually is not a good example. Let's try to find one. So we can see over here. Okay, so we have this IFC structure over here, and we actually trade into the block and move away. Let's look for the confirmation over there, right? Let's see what we have over there. Because I really want to show you that you need to have patience. Sometimes price is going to take its time to actually develop something that you're comfortable with executing, right? Then that's why you don't really want to be rushing into your point of interest. Maybe a bigger time frame, 3 minutes should show us. Let's see, but we've done a couple of examples already. I think the external and internal shift should be something that you should be very good at this point. Okay, so I cannot go that full back. That's fine. We can see one here, right? And this is something that I want to address. Look at this mitigation, guys. This is straight up touch and move away. Unless you're taking a risk entry over here for whatever reason you decide to do that, again, if that's part of your trading plan, then that is absolutely valid. But unless you had a risk entry set up over here, you probably would have missed the trade. And this is what I talked about in the point of interest section, where we talk about the different mitigation plays, right? There's no way to catch this. Once again, this was actually beautiful because we had lots of trend line liquidity over here. We take that out into a points of interest and we move higher. If we look into a lower time frame, you probably will not see much over there, right? Look at this. This happens within 2 minutes, this drop down. So there's no way to catch this entry over here unless, once again, you're using your risk entry. But let me actually try and find a POI where we take a little longer to mitigate so that you can understand that you need to have patience when looking at those points of interest, right? So maybe we go to a different market. Let's go to GBP JPY. GBP JPY is extremely bullish. Let's see if we can find a point of interest that really slowly got mitigated, right? So you had this FU candle over here, and as you can see, if you denote the 50% or the whole wick, that is up to you. But let's actually zoom in and see what we have over there. Let's see. So we hit the block, we shift externally over here. You could potentially argue this is an internal shift over here. Again, it's subjective, or if you wait for the high, then that is not a valid shift, right? Depending on how you do it. But looking at this, you can see how this takes time, right? This mitigation begins up at 3 p.m., which is essentially New York open. or 1 hour after New York open, so you know that that is a high probability mitigation. That is explained in the point of interest section, but whatever, right? You can see that price takes its time, right? It plays in and around the POI for about an hour and a half or even more, right? You could have potentially caught an entry over there following the protocol. You could have used this section, this section, this section, this section. That is subjective, right? You could have caught an entry over there, and you can see price delivers higher. Or if you miss that, price will sometimes return and give you that re-entry or a new opportunity to enter the trade, right? But what I wanted to illustrate with this is that you need to have patience as price plays into your POI. You don't want to be the trader that's rushing your protocol, really seeing stuff that it's probably not happening and trying to be the very first one entering the trade and really trying to call the very bottom. No, you want to give price time to develop, and if you see something that you like in regards to the protocol, you're going to be fine to take the execution, right? Otherwise, you should really be staying away, in my opinion. So at this point, you should have a pretty good understanding of what we really wait for, right? But just as a rule of thumb, let's go over here. Let's get rid of this, right? This is our POI. You want liquidity being grabbed, but that's already explained, right? And you want to wait for that protocol, right? You want to wait for that external shift. You want to wait for the retracement that confirms your structure point. And then you want to either wait for the high to break if you want to be safer, but that means that sometimes you're going to miss the trade, or you want to wait for a order block to break close to the high, right? And that is also valid. We could potentially break a block over there, mitigate the high, and then still hit over here and shift. So that is going to be up to you in regards to the internal shift, right? But remember to always have patience and wait for your entry protocol to be fulfilled. So something that I really want to talk about before we wrap up this video is about the Wyckoff idea, right? And Wyckoff method that some of you guys may trade or may know about. Well, I want to make very clear that only looking at Wyckoff to execute positions within your POI region is not something that I teach and not something that I really believe it's going to be helpful for you guys. Trust me on this, I've been teaching for a very long time, and I know some people make Wyckoff work, but the reality, and this is the fact over here, is that you do not always get that perfect Wyckoff mitigation, and sometimes all you do is try to force it, and you fail doing that, right? Because if you're trying to trade Wyckoff on every POI, and a POI may not provide Wyckoff, right, and may just do something like this, and you're trying to trade Wyckoff, you're going to fail. So that's why I'm not really discussing Wyckoff. However, if that's something that you do, that you've learned, that you've tested, that works for you, then absolutely go for it and use that. But for me, I would much rather use the protocol that I've just explained to you because it's going to be applicable on most of the mitigations. Again, not always, right? Those mitigations where we just hit the block and move away, those are going to be missed. But that's fine because not all of them actually do this. Matter of fact, most of them actually take the time to develop within your POI, right? So understand that, please. And also understand liquidity within your POI, right? If you see that you have your protocol fulfilled, right? Let's say this is your internal shift and your protocol is now fulfilled, and you see that trendline liquidity is being built over here, then maybe do not try and take the trade at this point, right? At the trendline liquidity. No, then you have reasons to believe that price is actually going to be targeting maybe a deeper retracement somewhere closer to the origin below the liquidity, and that's going to function as your order block that you're going to be using to take the trades higher, and that's going to be beneficial for you because you now have a better RR. Your stop loss is below here, right? So your stop loss is smaller, and every pip amount that you gain is going to be bigger and more rewarding, right? So keep in mind always the liquidity aspect, as well as really when it's happening within your POI. You want to be paying attention to the liquidity that is being created, because what you will find is that while you're mitigating a point of interest, liquidity is going to be engineered most of the times, right? And you want to be paying attention to that. You may want to wait for the grab up, and then you're going to start your protocol, right? External, then you wait for the retracement, then we shift again, then you have your internal break, and this would be a pretty nice spot to take your entries lower or potentially over here, right? As long as you keep your stop loss above the high, you're going to be good. And that's pretty much it. That's going to be the end for this video. At this point, you should have a pretty good understanding on how we look at confirmations, what we look for, what is the protocol that you will need to follow, and what sort of the ideas are, right? So until next video, I wish you profitable trading, and I will see you guys soon.